Thank you very much, NTV. I would say the capital markets, as measured by how much Ugandans are saving, has grown tremendously. About 2014, there was only about 8 billion shillings saved under collective investment schemes or unit trusts, but to date it's about 498 billion. Now that has grown in multiples over the past few years, and we expect this to get to about 1 trillion in the next 2 or 3 years, and even more. There's a lot of potential for investing or saving through unit trusts or collective investment schemes. So I'll say the capital markets in that respect has grown tremendously over the past 6 years. Right, I would really say that our focus is on business enterprises in general, not necessarily the small and medium enterprises. So we're trying to get business enterprises to realize the existence and benefits of raising non-bank financing to finance the operations. Now, this is through different forms: commercial paper, corporate bonds, private equity, and eventually, if those that can also have a vision to list on an exchange ultimately. But we're really trying to get them to focus on all forms of non-bank financing, because we think this is an area that has not been tapped well by many businesses through lack of awareness. So we started an issuer resource persons program where we had knowledgeable consultants or experts to go out and speak to business owners about what they need to do to prepare themselves to access market-based financing. We've also been running programs on what it means to prepare yourself from a governance perspective, and what investors or partners look for before they can invest in your business, either by providing bonds or by being an equity partner. We've been running a series on corporate governance to make business owners realize that corporate governance is not a headache, it's an investment or something they need to invest in order to better prepare themselves to be attractive for partners. So all this is really aimed at helping business owners prepare themselves to access market-based financing. We also began the deal flow facility, something we're calling the deal flow facility, which is basically an incubation center being supported by the European Union. It's going to be implemented by FSD Uganda. This is really to also, in a sense, continue this work that we began in a more focused manner for a longer period of time. So all we did was to catalyze the beginning of this project, but it's going to be implemented by FSD Uganda. And we really hope to see more business owners participate in it so they're able to raise alternative forms of funding to complement the banking sources of funding. I think all government needs to do really is just to maintain the enabling environment that we're seeing of low inflation, so that people have confidence in the fact that the shilling is a good store of value, such that they can save more and more in shilling-denominated assets. So all the policies to do with maintaining the shilling as a good store of value or a stable store of value are important. And also to continue to support the initiatives that we are undertaking, like the deal flow facility, such that more and more people can see the benefits of raising capital through the capital markets, non-bank financing in all its different forms. As I mentioned earlier, private placements, listing by introduction, where private placements is basically where a business is able to place some of its shares privately with a few investors, or to even raise money through bonds privately or commercial paper privately. One of the benefits we see of capital markets-based financing is that it's long-term in nature and it's patient, especially now during the COVID times. I think this is now when businesses really require patient capital to weather the current storms of the pandemic that we're currently seeing. Capital markets is able to really the amount of resources that can be mobilized is a function of how much is saved in the economy. And that's why we like long-term savings. Essentially, capital markets is one way of bridging long-term savers with those who need the money for the long term. That's why we're very interested in the discussions around the reform of the pension sector, because we want to see more and more long-term savers in the economy. So the move to establish a contributory public service scheme, pension scheme, is a welcome move, because that long-term money will be deployed to finance the real economy. So those are the sort of moves that we expect to see, and which we think will help develop the markets significantly. Well, we've got a 10-year capital markets development master plan. Ultimately, we want to see ourselves as a country classified in the Morgan Stanley Capital International Index. Right now, there is Kenya in that index, is Botswana. Once we get there, we expect to see an increase in the number of foreign investors interested in investing in our financial assets. Normally, classification by the Morgan Stanley Capital International sends a signal to investors that we have achieved a certain status in terms of the efficiency of our operating systems, and our entire financial ecosystem. As you can see, we have been ranked number 10 by the African Financial Markets Index run by ABSA over the past 3 years consecutively, even when the number of players is growing. So in a sense, we're improving. And we need to maintain that sort of momentum by just addressing those areas that have kept us below. So those are the sort of areas that we want to see done, essentially, to help improve our rankings and increase more private financing into our economy. Well, I just want to urge Ugandans to really consider saving through the capital markets, through financial instruments provided by the people we license. And Ugandans should not just invest in anything because it appears to be too good. And many times, many of these schemes that we've seen Ugandans running afoul, they promise very high returns, right? And yet they don't think about return of their investment. They're focusing only on the return on the investment. So I really want to urge every Ugandan, before they invest in anything that looks like a financial asset, to check whether the providers have been licensed or approved by the Capital Markets Authority. In that way, that's the only way of really ensuring that their savings are safe for the long term.